So are you seeing, from your point of view, in dealing with your customers throughout the country, throughout the world for that, throughout the country, are you seeing a fundamental difference in the economy yet? Because a lot of what's going on in the markets seems to be driven more by hope and by talk than actual fundamentals. Are you seeing fundamental changes in the economy?
Well, the fundamental change has been going on. And so if you look at consumer spending, in 14 to 15 and 15 to 16, it's been going up. And consumers in the aggregate are spending, 4 to 5% more this year, 5% plus more this year than they spent last year, and likewise the prior year. And the rate of that's actually picked up. So that's tremendously good, and that means that the U.S. economy being 2/3 driven by the consumer, and Bank of America having a fairly decent-sized customer base, and seeing that $50 billion of credit card and debit card spending grow at 5% year over year, and growing faster this time over the latter half of the year than the first half. Those are all very good things, and that means the economy is in good shape and it's grinding ahead and making progress. The difference after the election, especially, has been in the business side, the enthusiasm that the world is our oyster, or whatever phrase you want to use, that just enthusiasm in mid-sized companies, that they feel that there's just more they're going to get done, that they feel better about the prospects of the regulatory environment in their businesses. They feel better about the possibility of final demand. Now, that's going to take time to actually come through, but instantaneously the consumer confidence shot up and the business confidence shot up. And when you think about mid-sized companies, you and I own a company, we can decide to do something or not do something, build a factory, open. And if we feel better, we will do it. And if we do it, that means things happen. What was happening before is people are hesitating, and now I feel, whether it's animal spirits as the phrase is used and things like that, I just feel people are saying, hey, let's go try it and see what happens.
And are you seeing that specifically in the mid-sized companies, the mid-level lending?
Yeah, we're seeing that lending grow. We're seeing it grew faster in the latter part of this year. Drawing a little bit more on their lines, which means they're putting the money to work. But again, it's got to follow through because it's 6 weeks since the election or whatever, and time frame's relatively short. But people forget how much attitude is important for that group of companies. For big companies like us, we always have to be swimming forward and doing something tomorrow. Every day, we got to figure out a way, no matter what the environment, we have to make more money, we have to get more efficient, we have to generate more revenue, take a little more expense out, apply more technology. That has to go on forever. Mid-sized companies can make their decisions differently because they're privately held, but when they are excited, that's very good for America.
Part of your job description is sort of being a macroeconomist of sorts, to understand what's going on in the economy, where it's headed.
Macro risk manager, probably, than economist.
Okay, macro risk manager. As you look at macro risk, what are you anticipating in terms of the economy under Donald Trump? What do we know? What don't we know? What are the questions in your mind?
Well, I think, let's be first, what our team, we have the #1 research team in the world for 6 years in a row now. They just got the 6 years, so it's very
Congratulations.
Good. So thank you. So Candace and the team have the U.S. growing around 2% next year, which will be an increase from what they think this year will end up 1.5 to 1.7 or something like that, somewhere in that range. So that's an increase. And then the world in the low 3s, which again would be a step up. And so their fundamental belief of that hasn't changed a lot since the election. And so I think we believe the economy in the U.S. will grow, and we believe the economy in the world will grow, and it's a little bit more on the upswing. So they picked up, and it fell off this year, and we think it's back up. And so that part of that uncertainty that we went through this year has been handled by the markets and by people predicting outcomes, which is pretty interesting. Between Brexit, the Italian referendum, the French election scenario to date, the U.S. election, all that stuff that people thought, if this happens, there's going to be huge disruption. The market disrupted for a few hours and came back and said, you know what, life goes on. So I think there's a tremendous momentum and capability and size that's behind us. So the question is, with Trump's election, as I said, businesses are friskier. They're more active. They're talking harder. You're seeing that go on. You're seeing the other thing, that the oil and gas business, because the prices come up, is starting to invest. The rig count's coming up. That's good for capital expenditures. That ought to help next year. You think the belief of our clients when we talk to them about regulatory burden is it will come down, and that will help them do things more quickly. So all that they believe is good. Now, there's other serious concerns. We have labor is trickier than people think. The unemployment rate's very low, so getting the right labor in the right place at the right time with the right train, kind of tricky for people right now. And yet there hasn't been great wage inflation, but largely it's the right jobs than it is in the macro sense, a lot of wage pressure. So I think we'll be fine there, but we've got to do a lot of work to make sure that people are trained into it. But I think, the sole difference that happened, the big difference that happened in the last 6 weeks is enthusiasm. And so if that follows through, it'll be interesting.
But I understood you to say that your research team, the number one research team again, has not taken their GDP growth numbers up in response to Donald Trump. Have the markets then overreacted? Because certainly the markets have reacted as if GDP is going to grow faster.
I think this is one of those questions that you have to always ask. They actually took theirs down a little bit in the first half of the year because they thought the uncertainty around, is tax reform going to happen? Is repatriation, is going to have people slow down and wait to see what's going to happen? It's kind of an interesting viewpoint. I'm not sure they'll. It would be interesting to see how they think about that going forward. But that was one of their initial reactions: is the news could be so positive that actually freezes people. When people think tax reform is coming, they'll wait to see what that tax reform might say because they might be losing an advantage by doing something now. And so, there's always uncertainty. But I think they're fundamentally it's a solid U.S. economy. They're fundamentally it's a solid world economy, and the risk factors are gone out because the market's reaction to the election in the United States, the market's reaction to Brexit has been behind us. So they're saying, okay, that's not ahead of us. And there's still always another election, always another possible outcome. But I think they're very constructive. They haven't raised them because, in the end of the day, that is based a bit more on real items and real trajectory. And until confidence arises in more final demand and more spending and more activity, you're going to see it go on. You're going to see them keep it in the 2% level, would be my guess.
And some people have said that the markets are sort of taking all the good possibilities out of what we've heard out of Donald Trump and are not really pricing in some of the unintended consequences of the bad consequences. Where are you on that? What are some of the unintended consequences we might not be thinking through?
Well, I think I'm not sure that you can say that any presidential candidate or elected president or president-to-be doesn't have the same problem, which is there's a series of things that have been prioritized or stated, whether it's tax reform, repatriation, immigration reform, Affordable Care Act, and things like that people are focused on. The question is now you got to get them done, and that's always the trickier element. Now, there's great view of alignment between the Senate, or the House, and the presidency will help that through, but that's the real trick. Can you get this done? And these things get harder when you get down to the brass tacks, and so they're never easy. And so I think the market's enthusiasm is at least we're going to try, and that's good. And then we got to see the follow through.